Hello, everyone. Welcome to the Nasdaq Dorsey Wright podcast for the week ending on November 21st. My name is Ian Saunders, joining Miles Clark. I think you've been on this more frequently than I have recently. So
Yeah,
yeah,
you sound tired, man. Were you out late last night?
not out late, coming back late. We were up at a conference or kind of like a mini conference that we put on for some Morgan Stanley advisors up in New York. A great event, but it's just sometimes those late travel days come in early podcasts.
Right.
Gotta get the people what they
Yeah,
want,
we were
right?
talking yesterday. We were thinking, Joseph and I, who's on frequently, we were like, we'll push it to tomorrow so we can get the post NVIDIA podcast, right? And we were just like, yeah, have fun with that, Ian. After getting back in at 3 a.m. and get you out here bright and early, bright-eyed and bushy-tailed, but you
I
got your
thought you just
coffee.
wanted to have me on so badly. That's why you had
You
it.
know what? Let's go with that,
Yeah.
right?
So, I mean, in coming in, we got some pretty interesting movement to talk about over the past couple of days here.
Yeah.
I think earlier this week, on Monday, I believe, we saw the Nasdaq 100 hit a 5% pullback, which happens more frequently than you might expect.
Right.
The S&P didn't quite get there, got close, if I'm recalling correctly, and then didn't quite hit that 5% threshold. And then we've seen some interesting movement on the participation side of things. We'll dive into that. And then obviously NVIDIA, Walmart, two big earnings, highlighting some different areas of the market, which I think are pretty interesting. Both of those seeing some improvement. We'll hit on that to kind of wrap up our charts of the week, if you
Yeah,
will.
for sure.
Yeah. What are markets doing? What are markets doing this morning? I guess before we dive into that.
Well, as Nvidia goes, kind of the rest of the markets will tend to go probably. So Nvidia, at least at the time of this recording on around 9:15 or just before open on the 20th, Nvidia's up around 5%. Q's Nasdaq 100, which we're about to jump into, they're up around 1.5%. So nice rebound here. After, like you said, on Monday, we've seen some turbulence in the markets over the last couple of weeks to open up the seasonally strongest month of the year, right? In November, or at least it's up there. I'm not sure if it's the strongest. But point being, Nasdaq 100, like you said, hit its 5% pullback earlier this week and is now kind of bouncing back a little bit, right?
Yeah, I mean, so you see the Nasdaq 100 hit that 5% down mark. I mean, if you're looking at I think we'll throw the default chart and then some performance information to take a look at. But the default chart, when you're looking at that, I mean, do you talk about a steady, sharp rise? I mean, it was just sharp move up, a little bit of consolidation, sharp move up, a little bit of consolidation. I mean, rattled off what, six consecutive buy signals on the default chart for the Nasdaq 100 from
Right.
that April timeframe up through October, hitting all-time highs continuously, kind of break. It was just, I mean, it's hard to ask for a better looking chart, really.
Right.
And then we get one sell signal, right?
Right.
I mean, we've always said the first sell signal, a strong uptrend, is not indicative of a trend change, right? I mean, you need some time for these things to take a breather. Honestly, I'd be more concerned if it just kept shooting higher.
Right.
You
Yeah.
know what I mean?
You're on 12 consecutive buys,
Right.
day, whatever it is.
And so now we see, hey, still rattle off a string of consecutive buy signals. You pull back, give a sell signal, add support just below the middle of a trading band. Not a bad looking setup to enter what is historically a pretty strong finish to the year in that post-Thanksgiving Santa Claus rally-esque that kind of time frame, right?
Yeah, I mean,
Um,
markets can't go up every single day. I think what this is probably indicative of is how afraid people are
yeah.
that this is the one, right? I mean, more and more people have been talking about AI bubble, everything like that. And so suddenly you get a 5% pullback and people are acting like it's a 10% pullback or 15% pullback. There's more people are calling in more. Oh, what are we going to do about markets, right? Relax,
Right,
right?
exactly. And I think
You
one
know?
like helpful, a few helpful stats to keep in mind is when we look at like the number of times you get a 5% pullback
Yeah.
in the Nasdaq 100. I think the Nasdaq 100 averages about 60 days in between 5% pullbacks historically. Now, a lot of those 5% pullbacks, when we're looking at just all of the 5% pullbacks we've seen, those will happen in bear market environments. So you get a
Right.
lot of clusters,
Cluster.
right?
Yep.
So it's not necessarily like, hey, every 60 days like clockwork. It's just the average number to kind of work from, right? So every 60 days, we saw over 200 days since the
Yep.
last 5% pullback. So this was overdue.
Right.
I think is like long story short, kind of what those stats are starting to show. But Trevor on our team took a little bit of an interesting look, looking at forward returns for the Nasdaq 100 after declining from all-time highs and split it off by the severity of the decline, which we hadn't taken a look at much before. I think it's easy to look at all the averages, but like I said, you get clusters. So let's split it off and just look at, hey, how does forward performance look after 5 to 10% pullbacks? Pretty darn strong.
Right.
right? And that's kind of long story short what that table's showing, right?
Yeah, for the most part. I mean, you kind of look back, of course, hindsight is 2020, really at any point when the market, it's kind of like a Bitcoin, right?
Hmm.
Anytime Bitcoin fell, you just wanted to buy Bitcoin, right? Nasdaq 100, obviously, not Bitcoin. I'm not saying that.
Yeah,
Um,
pretty correlated, but
there you go. That's a conversation for another day.
not so interesting.
But point is that for the most part, any time in the last decade, any time that you got a pullback of 5 to 10%, more often than not, it was just markets taking a normal breather, right? Of
Right.
course, in order to be down 10%, you have to be down five. In order to be down 20%, you have to be down five, right? So, of course, there is the possibility that we do continue lower, but more often than not, you're not. And forward returns from just a 5% decline are pretty strong.
Yeah, I mean, you're looking at forward returns over the 3 month time frame. I think is the pretty interesting one to look toward. Weeks are different. 2 years are everything's up 50%, right?
Right. Yeah.
But if you look at that 3 month time frame, it is the lower out of the declines, which just makes sense. The sharper things fall, the sharper they rally back, right? But if you in that 5 to 10%, you're still up 7% on average over the next 3 months, which is 150% higher, like zero point 0.5 higher
Yeah.
than the baseline 4% average from any time, right?
Right.
So I think it's just another interesting tidbit to consider. We've seen a snapback. Expectation would be, hey, yeah, things can get worse,
Right.
but at least what we're looking at now is saying that if we do start to see a turnaround, it could set up well to end the year. But we are seeing when we're looking, the Nasdaq 100 is kind of the biggest things out there, right? Biggest, highest growth things out there. But some of the participation indicators are showing a little bit of a rollover.
Right.
There were a couple that we were looking at specifically. One that you're focusing on, looking at the positive trend, the longer term participation indicator for the New York Stock Exchange. Is that right?
Yeah, so we typically look at, three flagship indicators. Now, you ask other people, they'll have other ones that they use. But around the office, we'll typically focus on three: TWSPX, or the TWs, the BPs, and the PTs. So we're going to focus on the PTs, which are the longer of those ones that I just mentioned. And those measure the percentage of stocks in a given universe that are trading in a positive trend, a long-term positive trend, which is a favorable attribute. We can apply that kind of criteria to various universes, which in this case, the chart that we're just about to throw up on screen is PTNYSC, which measures the percentage of stocks listed on the New York Stock Exchange that are trading in a positive trend. So again, we want this number to be higher, right? That means more stocks are showing long-term favorable relative strength, or at least positive or trending in the right direction, right? We saw this reverse back down into O's after really just kind of bouncing up around and kind of holding steady in between 50 and 60% for the most of kind of the August to November timeframe. So we got our first chart action in the last couple of months. What this means to me, Ian, just less stocks obviously trading in positive trends, and also less stocks, less small cap stocks, less mid cap stocks. You think about what type of stocks are listed on NYSE, there's going to be a larger swath. It's not just the big names, right?
Yeah, when you look at the breakdown, at least from the way we classify small, mid, and large, it's kind of a third, a third, a third.
Right.
And so whereas we tend to look at the S&P 500 participation indicators because that is the core market representation, as you said. But then when you're looking at the NYSE, I mean, we've seen weakness from small caps. That's nothing new. They've been the laggard, showing some areas of improvement, but it's kind of longer term weakness. I think an important thing to note with this chart, it hasn't been higher than 62%, which we reached in December of last year, um, since 2021, right?
Yep.
I mean, that's a long time in
Yep.
relatively low field position.
Well, you think about a third, a third, a third. Who's the third that was the culprit over the last couple
Exactly.
of years, right?
Exactly. Yeah.
Small
I
caps.
think you get large caps, you get mid caps
Yeah.
back in positive trends, and maybe a third of those stocks haven't. That's why you haven't been able to get above 66%, right?
Yeah.
And so when you see this swing lower, yeah, it's not a great sign.
Right.
But you kind of look at it as I would say like a yellow caution light, right? You
Right.
see a lot of action occur around that 50% level historically over the past decade. It's seen a lot of movement in that kind of 40 to 70-ish range, really around that 50%, relatively normal market action.
Right. What you really want to avoid, and we throw a table in the report from time to time, so certainly go check that out. But what you really want to avoid is prolonged stays, if you will, between 30 and 40%. So that kind of range where we're not washed out, but
Hmm.
stocks aren't moving higher, right? It's
Right.
just kind of like no man's
You got a
land.
third of the stocks on positive trends. You get that kind of consistent churn lower is really what that's shaping.
Exactly. And you're not getting the big declines, the big exhales. You look back at the chart 2020, obviously, like April of 2025 or 2025, most recently 2022, you got a couple series of washouts. But point is that you're not getting those, but you're also not like moving higher. So it's just kind of the worst of both worlds. So we're not necessarily in quote dangerous positioning yet, but this is definitely something that we're watching as we move into December and into early 2026.
Yeah, and when we're looking at other indicators, positive trend indicators move slow, right? I
Right.
mean, that is the longer term, longest term, one of the longest terms of the participation indicators. Others that you can look toward for more near term action, where markets are looking like they're going to be up at least 1% this morning based upon the pre-market action we're seeing. The 10-week for the S&P 500, TWSPX. You mentioned that a little bit as the near term focus one that we like to hit on. We've seen that chart move lower. It's going to move quicker than those positive trend charts. Is that fair?
For sure. Yeah.
And yeah,
Go
we've
ahead.
seen, yeah, and in looking at this, similar kind of that movement from between 30 to 70, relatively normal action. I mean, if you look back in 2024, we saw a sharp decline in April of 2024 down to that 30% level, hit that, and then bounced higher from there. Now we've seen a steady churn lower down to the 34% level, right? And it's been a pretty consistent move lower. Now, the important thing to note when you're looking at this chart, honestly, I would say I turn off the signals. I turn off the signals, and the only really important things to look at are what column, what direction are you in,
Right.
and where are you on the field, right? And so we're 34% heading lower in a column of those. Again, this will start to move relatively frequently, but when we start to get close to that 30% level, that's where we're saying, okay, if we are in a normal market environment, maybe you could consider looking toward a bounce here. Now, it's not a trading deal really until you get down into washed out territory, but at least from a perception, understanding the direction of market movement, we're still in a relatively normal pullback zone.
Yeah, I think that's fair. And then, what's probably most important for the health of markets is, okay, we're in that normal pullback zone. When we get a reversal, where does it lead us to,
Right,
right? I
right.
mean, do we just kind of continue to churn lower and then ultimately we'll run out of real estate before we have a big exhale washout lower? Or do we reverse back up and kind of get back up to 2025 highs, kind of around that 80% mark, right? Do we get a big thrust higher as markets essentially attack those all-time highs effectively and move forward wholeheartedly into 2026? I think
Right.
that's what I'm watching.
And that does bring up a good point is that when you see this thing get down into low field position, it is very, very rare, if ever, that you see it steadily churn down into low field position. You need a washout move.
Right.
You need some kind of extracurricular action to come in and be like, oh, this thing's sending stocks lower, right? We haven't had that happen. And so, not to say it won't, maybe it could. It always can tomorrow, right? Well,
Yeah.
you
Yeah.
never know. But at least just because this thing's been moving lower, we haven't gotten that big washout move. It's I'm not overly concerned. I think that yellow caution light is still the important thing to kind of
Yeah. I don't take what I said the wrong way. It's just
yeah.
what just watching
No, no, I
where
was
it
saying I
heads.
think it's a good thing, good perspective to keep in mind. Now, when we're talking about yellow caution lights and different lights flashing on the screens, I think that we'd be remiss if we didn't at least hit on some of the technical pictures from some of those major earnings that were announced over the past couple of days.
Yeah, yeah. NVIDIA, interestingly enough, you're up at we haven't opened quite yet, but we're, trading up around 195, at least right now. That's, at least pinpoint right to that point of resistance. It won't get you back up to the all-time highs at around 216 or 212 on our default chart there, but brings you up towards kind of this lower point of resistance around 194, 196 or so, and reclaims the middle of the trading band. So you're moving back up above your 50-day.
Yeah, and I
Good
think
there.
in looking at it, you have very strong support at 180, 178.
Right.
That kind of 178 to 180 range, just below the midpoint on the trading band, is setting up to be a pretty solid support level.
Yep.
If you look lower from there, you do have steady support down into the mid 170s to upper 160s. So there's a lot of support baked into this chart. We've basically seen consolidation period from August into October, a little bit of a breakout, and then more consolidation over the past couple months. And it's been a just the consolidated picture. It hasn't really shown a ton of movement in one direction. We got that big spike higher in October. It gave all the back, basically,
Yep.
right? It's just sitting smack dab in the middle of its trading band. I think you're right for a move in one direction or the other. Beat earnings seems like it's going to go back to a buy signal. I guess where did it open? Market just opened right now, right? Um, should be just kind of ticking right back up. Return you to a buy signal. You got a lot of support baked in there, a little bit of overhead resistance, but it's relatively normalized market action.
Yeah.
I mean that could again set up well for further improvement as we head toward the end of the year.
And I'll tell you, I'm just looking at it now, and we talk most frequently about it being an art, not a science.
Yep.
But you get a couple things I'll mention, and I'm going to try not to geek out too much over this chart.
No, go ahead.
But you look at those two levels of support that you mentioned, and again, we'll highlight them on the chart. But you look at 166 in between, kind of let's call it 174, right? Let's call that as an established range, right? Then you get a move higher and ultimately come back down. That's a higher support level in between that we've established between kind of 176 and 180 or so here. So point is that you are building higher lows. That's important. That pullback there around 180, that's also the point where we saw some old resistance. Now I'm playing, some estimates here.
Well, I'm going to say, you know what happens if so when you move the chart above 200, it goes to a 4 point per box size chart. What
Right.
happens if you normalize the whole thing to a 4 point per box size chart right now? All of a sudden, you have very strong support at 180, still on two consecutive buy signals, right at the middle of its trading band. You get a breakout if you get back to that 200 point, you get a third consecutive buy signal, right? And that's not a bad looking
No,
chart
not at all.
heading forward. So you can play with the chart scales to show you whatever. A lot of times when you're at a turning point like that, when it goes from $2 to $4, I just like to go with the higher one
Right.
because it's like swings the whole price, kind of normalizes a bit. But nonetheless, long story short, I think it's and another thing to note, it is a 4 for 5 attribute stock. And NVIDIA has been the bellwether, the big name everyone talks about. People might be, oh, it's only a 4. Why is it not a 5? Right. And I think something to note, it moved down from a 5 attribute stock to a 4 attribute stock in mid-September when we started seeing some of this consolidation, right? Um, that might raise alarm bells for people.
Right.
But when you actually split off the attributes, and Chuck's done some testing on this, we don't have the stats to show you on screen. But my understanding was that typically one of the higher attribute ranges to look toward is a falling 4. Something that was a 5 fell to a 4. What does that mean? Hey, it's been strong for a while. It's still strong. It's just pulling back a bit.
Yeah.
Right. And so that could be another interesting area to look toward. Just because you see a 4 with a down arrow doesn't mean a bad thing. Right.
Right.
It's still a 4 is still a buy.
Well, and that's why you build in the ranges, right? So we'll say a 4 to 5, they're going to be buys, threes are hold or technically acceptable. Just really is going to depend on the
Depends on the
three,
prop. Yeah.
right?
Yeah.
Versus zeros and ones and twos. So systematizing it again and learning to take the emotion out of it. I get clients all the time who call in, Miles, it dropped to a 4 from a 5, right? And it's should I sell it? Was it just going to drop to a 3, right? And of course, the
Oh, it's
ultimate
gonna go to a
answer,
1.
yeah, exactly. So, removing some of that emotion, letting price really dictate, it's still a strong stock and has been for quite a while, right? So
Yeah.
don't get too concerned about that.
Well, another falling 4, Walmart that
Yeah,
reported this morning, coincidentally enough, two very different stocks, but very important stocks in their own right, right? I mean, NVIDIA is the kind of bellwether for the AI space, and Walmart's just at least historically looked at more of the lower end consumer
right.
representation. And so I think there's a lot of concern out in the marketplace that, hey, if we don't see strength from Walmart, does that mean the lower end consumer is really starting to pull back and might pull some broader parts of the economy down with it? That was not the case, at
Right.
least from what we saw in earnings. Walmart also did very well from an earnings expectation perspective. Stock is looking like it's going to be, what was it at right now?
It is 104.
104. So it looks like it'll reverse back up into a column of X's. We've seen not the same kind of improvement from Walmart.
Right.
But we have seen similar kind of consolidation, honestly.
And let's be good. We wouldn't expect to necessarily see the same improvement from Walmart as we would from NVIDIA. We're
I
talking
don't
about.
know. I mean, you look back in 2023, 2024, it was NVIDIA like improvement.
Yeah,
I mean,
you're
that
right. All
thing
right.
is
Just
rocketing
a
this year.
straight line higher. Yeah,
Yeah.
pretty much. All right. Maybe I'm wrong.
Um,
But I will mention though, but bringing back again, geeking out over a chart. We talked about Nvidia's higher lows.
yeah.
Pull back to it's almost eerily
Yeah.
similar
Yeah.
looking chart here.
That's
But
what I was getting at.
there you go. Well, but you get a reversal back higher here. You have those higher lows in terms of your support level, and then the pullback brings you to a point of old resistance around 99 or so. At least when you get that break point there. But point is, you get pullback to resistance. that looks to be a new higher low there for Walmart if we get a reversal here, which would be constructive.
Yeah, I mean, this chart, the signals have flip-flopped quite a bit. Moving it out to a 2 point per box size chart doesn't isn't is actually does a pretty good job of normalizing that picture a little bit here too, because you're around that break point.
Right.
You're still in a string consecutive buy signals. You're at that strong support at 100, like you said, it hasn't fallen to that 98 level, but you got support at 100, 96, 94, 92. I mean, there's a lot of higher lows kind of baked in there right below the middle of the trading band. On Yeah, I mean, NVIDIA and Walmart could cover up the picture, and I wouldn't be able to tell you which one's which at that point, right?
Right.
um, but we're still, again, pulling forward, still in the top half of that retailing sector matrix. Thing has been a stronger attribute name for quite a while. And so we'll see if this can continue higher, break out to all-time highs at that 110. If it breaks above that 108 level, that's kind of the line in the sand that we look toward for those all-time highs.
Yeah, I couldn't have said it better myself. Obviously, like you like to see big names doing well. Of course, if we bring back to some of the participation stuff from NYSE, you want to see small names starting to do well. I think that's going to be a really important battleground as we move into 2025. And I got nothing else.
Yeah, neither do I. I guess we'll see what happens throughout the rest of today's trading, but shaping up to be some interesting movement in the year here. And so when we're talking about the end of the year, do want to hit on next week's Thanksgiving. We will not be having a podcast next week. Give Miles time to eat all the turkey, so
What are you saying, man?
that'll be that'll be just a notice there. We'll be back in December though to kind of
Yeah.
start off the last few podcasts of the year.
Yeah, we're certainly, thankful for, you all reading and listening. We love our jobs and we wouldn't be able to do it without y'all. So again, appreciate it. Have a safe travels. Enjoy the time with family and friends, and we'll see you soon.